So then why did we bid? Because it was a place to start. We are short at public debt at what I termed really optimistic levels. So buying it at down 35, even with these adjustments, it's probably going to be an okay investment.
You say you're short public debt, like what? Like you're short, like
high
you're
yield?
like a matched like high yield debt against getting long this stuff, or like is it? Am I missing something?
Yeah, a huge part of our capital is to provide investors tail protection, and so our domain expertise is credit derivatives, and so the liquidity in high yield credit derivatives is such where you can put on tens of billions, and so I have that as a short. In some sense, this at a discount fits as a long, because if we're right, and if these buys at minus 27 or minus 35 are bad buys, look out below. And I will point you to when the Cliffwater news came out. Since that minute, high yield has been suffering compared to
I was gonna say, you say look out below. Like, is there like a scenario where like the stuff you can be short in high yield totally diverges from like PDC software loans, like?
Right. So you're bringing up a good point about basis risk. Right. This is not a match trade, and the average company in the high yield index is quite a bit bigger and even better than a private credit portfolio. So, leave it to the ingenuity of Goldman Sachs. Now they're pitching total return swaps on private credit portfolios. People want more of a one-to-one.
And they're pitching it to you?
No, to everyone.
Sure.
Yeah. But
you might need it.
but also, I as I saw in COVID, sometimes people who can't sell the thing they can't sell will sell what they can sell. And so private credit can certainly infect public credit. And when I say what I saw in COVID, if you ask me, I often say like my imagination and the markets is not great enough. First of all, I don't think people's imagination here is great enough because so many people think we're going to buy none. So what did I mean about COVID? I never would have thought ETFs for high yields could trade at 10, 15-point discounts. ETFs, they did, and people sold them there because they needed the money. And so I think actually public markets are very affected by this private credit problem.
I think that when you say like people think you're going to buy none, like it's like such a classic like market maker adverse selection question. Like you're either going to buy none or you're going to get filled, and you're going to probably immediately regret getting filled.
Probably if we get filled and oversubscribed, our next bid is decidedly lower.
Sure.
I've never been in a spot where like that information, that alternative data set, if you will, is so desired by the market, because actually I'd be curious about a poly market on that